Hello, everybody. Welcome to the technical analysis webinar. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the session. As we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. It looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. And so, as always, keep in mind, as we're going through any type of trade scenarios, opportunities you might be interested in trading on, all investments have risk. That includes Forex trading, CFDs, options, spread betting, etc. So there's no guarantee of profit on any one trade. I think we all understand that. But certainly there is a nice potential for profit on each and every trade. And so the idea here is, as we go through the webinar, from an educational perspective, and not to be taken as financial advisement, but from an educational perspective, to learn some methods, some strategies that can improve upon the results you're already having with your trading. Or if you're just getting started, and I know we have a lot of new traders in the webinar, maybe some that don't even have live accounts yet with AvaTrade. Welcome to you as well. As we go through things, keep in mind, even if you're building strategies from the beginning, it's important to start with a good foundation, to have ideas and knowledge that you can build on. And so that's part of what we're doing in the webinars as well. And so there are different ways to manage risk, since we're talking about risk a little bit here. You can use stop losses, you can use hedge positions, which we go over those concepts from time to time with how to use hedging to manage risk. And also you'll notice as we go over our AvaTrade Go mobile app functions, which is unique to AvaTrade and our web trader platform, you'll see there's a unique way to manage risk using what's called Ava Protect, which is a nice risk management feature, protecting against losses for defined time periods. And so we'll go over some of those ideas as well with regards to risk management. Now, as we go forward, a basic understanding of what is technical analysis is important. And I know a number of you are veteran traders, but it's always important to, in the beginning, to understand the basics of what we're going to expand on. So what is technical analysis? It's looking at the historical data on the candlestick charts, typically is a type of chart we're looking at, to see what's the history of the price movements and can we identify any patterns in terms of the movements that we think we can then better predict future movements. And so maybe we find different price levels of support or resistance. Maybe we identify ranging movements, trend movements, etc. And those technical patterns on the charts then help us maybe to decide entry points and exit points for trades. Hello, Cyrus, welcome. So there are different ways of doing this technical analysis. We tend to rely largely in the webinars on manual methods of technical analysis, meaning identifying the patterns ourselves so we can understand what we're seeing and draw our own lines of support and resistance, etc. Another way of doing technical analysis is to use indicators. And I think the last session we threw on an indicator, Fibonacci indicator, that showed price levels and important lines on the charts. And so indicators, I think, are good for a supportive mechanism once you already understand how to read the chart yourself. And then indicators can help solidify what you might already be thinking, okay? What the limitation of only using indicators to determine entry and exit points is indicators can't adapt to the fundamental news, okay? And so if you're using only Fibonacci levels or only the RSI or only the stochastic indicator or whatever indicator you prefer out of the hundreds that are available, the indicator doesn't know what the latest headlines are. It can't prefer one signal over another like you can. So it's important that you can use indicators, but that you also understand that you're actually smarter than the indicator. You're able to maybe make a more informed decision than a robot type indicator can do. Okay, and so with that in mind, we'll go to the charts. If you have any questions, if you want to give input, please feel free at any time. Natalie, you're asking how many indicators are best to use. It depends on your strategy, but I tend to abide by the rule that I learned really way back when I was a teenager playing football, believe it or not. Our coach always, pushed the KISS method. And we were like, well, what are you talking about, the KISS method? And he would always say, keep it simple, stupid, right? Don't overthink things. And so the KISS method, or whatever acronym you might want to use, I think you don't want to over-analyze things with too many indicators, because then you can have another common phrase, paralysis by analysis, where you're waiting on so many things to align before you make your move, because you've got 3 or 4 or 5 different indicators and you want them all to be in the right place before you make your move. That might happen never, or once in a blue moon, and so then you find yourself missing a lot of good opportunities that you could have otherwise gotten in on if maybe your strategy was a bit more simple. So in general, that's my answer to that question. There's no one right number for how many indicators should you be using. I many times use none, okay? And you'll see that in the webinars, that really you can keep things basic and do very well without overcomplicating things. And that's a very good question. Okay, so let's go ahead and take a look then at a couple things before we get on the charts. And we will get on the charts. We will do some live looks on the movements to look at what is available right now for potential moves. Okay, we're going to do that, I promise. So I mentioned the AvaTrade Go mobile app. And for those of you that are new to AvaTrade, very important you understand, and those that are veteran traders, that you understand what's available to help you. AvaTrade has really developed a lot of technological advancements that you might not see at any other broker, and that certainly I know some of the features you will not see for sure with other brokers. So if we look at AvaTrade Go, that's our home developed mobile app. It will work right over top of your MT4 and MT5 accounts. So you don't need a special account. You can use this app to log into those accounts. Okay, and what's nice about it is many things. One is it's got this feature called Ava Protect. We kind of alluded to that. Hello, Daniel, welcome. So we kind of alluded to the fact that you should probably have a plan for managing risk, right? Ava Protect goes beyond the simple stop loss and hedge trading that you can do really with any broker. Ava Protect, unique to AvaTrade, allows you to pick a time period, whether it's by the hour or by the day, and I'll show you on our web trader platform that it's available as well, to protect against any losses that occur that during the time frame that you choose. Daniel, you're free to use TradingView charts. They're not linked to your AvaTrade trading account, but you can use TradingView charts. I use them on occasion. It's no problem. You can use whatever chart stations you prefer. So when you're on our AvaTrade Go mobile app or on the web trader platform, because then you're actually on your trading account with us, you can use these features as you're placing your trades. Okay, and so Ava Protect allows you, let's say, for example, you're trading on gold and you say, wow, the GDP numbers are coming out today in the US. They're expected to be something like 30% GDP growth, which is that will blow away the highest on record ever, right? And so you're maybe anticipating positive momentum today and huge movements on gold. And so you say, okay, let me set up for a move in such and such direction on gold. But because those numbers are so highly anticipated, what if they miss the mark and things go the opposite way I'm expecting? And so you say, okay, I'll take a shot at a sizable trade on gold in the direction I think it'll go, but all the while knowing that if the numbers miss, it could go flying the other way just as much. So you put the protection. So maybe you do 1 day's protection to get through the announcement today. And you pay the premium when you open the trade, but the potential profit could be 10 times the premium cost, right? And if it goes bad and goes 10 times the premium cost in the wrong direction, you're only down the premium cost. Everything else is added back from the protection at the time the protection ends, or even if you close the trade before the protection's over. Okay, so really great tool, only found at AvaTrade, that you can use to as part of your risk management plan. Now, also the take profit, the stop loss, if you program those, and I'll show you on the web trader, it's the same way. This is our web trader platform accessed from this login on our main website. Okay, so the web trader platform, by the way, you get to your client area from here. Okay, so you get to your my accounts, upload documents, all of that. So let's say I'm placing a trade on gold. So very simple to find assets, type gold, there it is. I click on it, and here's gold now in my favorites list. And let's say I want to buy on gold, okay, for example. So if I'm here on this account, look how easy it is to know my margin impact. How much margin do I need to open the trade? Okay, I've got 0.05 ounces or lots, which is 5 ounces. Here's how much margin I need. What if I want 10 ounces, 9 ounces? You see the margin impact calculates immediately in my account currency for me. I know exactly how much I need to open that trade. What if I want to put a stop loss mark? Based on the trade size and where I put my stop loss, look, it calculates in my account currency what I'm risking to my stop loss price. I change the size of the trade, it immediately adjusts what I'm risking. Okay, so it acts as a trade calculator before I ever place the trade. So it really makes my risk management foolproof. I know exactly what I'm risking based on my trade size. Okay, and my stop loss distance. What if I put a take profit? Same thing. It calculates my potential profit for me based on my trade size and the price I want to take profit. So I know everything before I place the trade. And for those of you that are new to trading, maybe that's essential that it calculates it for you. Those of you that are veterans, you probably know how to calculate your risk, but why do it manually if you don't have to, right? So this makes it very easy. Someone's asking about, what about a buy limit? Okay, buy limit. Execute when price hits. You put your price right here. That's your pending order. It simplifies pending orders. You don't have to know whether it's a buy limit or a buy stop. You know, if you're new to trading, you might not know. Buy limit, you're programming in the MT4 to buy from a lower price. Buy stop, you're programming it to buy from a higher price. And you have to pick the right type of pending order in the MT4 platform in order to execute the pending order. Here, it's very simple. If you don't want to buy or sell now, then you say execute when the price hits here. That's it. You put the price. You don't ever have to pick whether it's a buy limit or a buy stop or a sell limit or a sell stop. Okay, so pending orders are simplified here as well. You can even put a date to cancel it, to say, okay, I only want this pending order to execute if it hits this price within a certain time period. You can do that as well, to self-cancel after X amount of time. Maybe you only want it to buy if it drops to a certain price before today's announcement, and you put the date that if it's past today, you're not interested in the pending order, just as an example. So a lot of flexibility in the order window, and this Ava Protect is available on gold, silver, and all the FX pairings. Okay, very cool features. Now, you know, the chart is nice. We can expand it. We can scroll in and out. You know, as I scroll back with my mouse, I can find these price levels. Here's a support level here. Here's a resistance level up here. Okay, and then I compare it to the current price, and I say, oh, if it's going to climb it, maybe it's got room to climb up to here. Okay, right along this line here. We can add indicators. They're called studies here. Just pick the one you want, and the indicator comes on the chart. Really cool features here, since we're talking about technical analysis, okay, in this webinar. Look at this. You go to Trading Central, and by the way, you have to be on a live account. If those of you that haven't opened a live account with us, if you're only on a demo account, this Trading Central feature, it's really great. The only part that'll work on a non-live account is the economic calendar, which is nice. Okay, shows you what's coming up. Huge GDP numbers being released later today. You can see that here. Expectation 30% growth. This is the expected column. Last quarter was negative 31%. That's the pandemic hitting. This is the expected recovery. If those GDP numbers come in at 30% or higher, whoa, look out for the stocks and indices maybe responding in a huge positive way, right? So it's good to know that this fundamental news is coming today, and you know the exact time it's coming, right? So very cool that you have the economic calendar right there at your fingertips within the trading platform. Now, what else can we look at? If you have a live account, you can also look at Forex featured ideas, analyst views, market buzz. Look at this market buzz. Okay, it's going to show you what's trending the most. Google has a lot of stories about it today. I bet it'll move a lot today then, right? Facebook has a lot of stories. Amazon has a lot of information on the markets. 158 publications right now talking about Amazon, okay? And we can see what other assets are trending the most. Apple Incorporated, Microsoft, Twitter, okay? No wonder some of these are trending. They were called into Congress in the US, Twitter and Facebook and some of these tech companies to answer questions about political bias. So there's a lot of stories about these guys. You know, if I click on it, look what happens. It brings up the stories. You can see what's going on with Facebook and Twitter. You can go right to the articles to find the fundamental news to see what's happening on those assets. And that's for every asset, not just stocks, right? And so really cool features that can help you decide what you want to trade on and what direction. We look at Analyst Views. Look at this. Your own signals from analysts. You've got charts outlined with lines drawn, with trading strategies and recommendations on those assets. Okay? Breaking it down completely for you. It's your own signal board built within the platform. Okay? You can pick the asset you're interested in. Here's the technical breakdown. There's your technical analysis. So those of you that are new to things, you don't have to do it yourself. Look at the USD Canadian. It's at a resistance level. Look what direction they're expecting. Down. Okay? It gives you the whole signal here. When to enter, when to get out. Okay? You see the images and the lines drawn. I'm glad, Marius, that you're already using this and it helps. And a lot of people aren't even aware that we have this because AvaTrade keeps upgrading everything we have on our home-built platforms. Okay, on AvaTrade Go and the Web Trader. We just launched this Web Trader platform in the past year, and the growth I've seen and the features now that are available for our live accounts, it's amazing. So what else? We can go to Forex featured ideas. Okay, more information. And so as you look at these offerings, you will see and you know, sometimes that happens. Everybody has an issue sometimes trying to load something. But as you look at these features, you will see that there's so much information for you to look at to help you make your decisions that, and we'll maybe check back on that page that's not loading for me here. It's probably a local issue on my side with my internet connection. But really great features, and you can go right back to your trading area just like that to place trades. And I can minimize that, have my favorites list. So simple to remove things from your favorites. Okay, just like that. Click the star. To add things to your favorites, here's the most rising today. Here's the most falling today. Maybe you want to get in on oil, so you say, let me add that to my favorites even. And now I go back and there it is. January contract. Okay, all right, so let's take a look then what's happening fundamentally. German unemployment falls sharply. That's good news, right? we're going to see real quick, German unemployment falls sharply. That's positive headline. China says we'll achieve sustained healthy growth in 2021 and on. Another positive headline, right? This is a theme. DuPont sees strong annual profit as auto sector recovers. Another positive headline. Record U.S. third quarter growth expected. We just looked at that. It's expecting like 30% GDP growth. It's unheard of, largely because they're coming out of a pandemic, right? So another positive headline. Analysis, as COVID persists, U.S. election nears, China growth lifts Asia. Another positive headline, China growth lifts Asia. Economic calendar, we see some green coming out of Great Britain on economic calendar. Announcements out of Europe, positive green numbers, okay? And here comes the big announcements out of the US for jobless claims, GDP growth, etc., and huge numbers expected, okay? So what are we looking at for potential for news today? It's huge, okay? It's huge. Said Chaba, I'm trying to interpret your question. Your investment is not being put into a refinery account. I'm not sure I know what that is. You're trading with us on CFDs, okay? On CFDs. So it's contract for difference. You're speculating on the price movements. You don't actually take ownership of the asset when you buy and sell with CFDs. So nothing's going into a holding account or anything like that. I think maybe you're thinking of a different style of investment where that information might be relevant. Okay, and what do we see on the futures today? Green, right? US futures are in the green after yesterday's sharp drop, and the the volatility index is down. So fear is down over 1.5%. The volatility index, the fear index, is down, and the futures are up. That shows positive sentiment. So in a nutshell, the fundamental view is positive headline, positive headline, positive headline, positive headline, positive headline, positive economic numbers for the most part today released, and now also looking at fear dropping, and the futures are in the green. So let's take a vote. Type positive or negative. What's the sentiment today? Positive sentiment or negative? Yeah, positive, right? In general, there's positive sentiment today, which is the opposite of yesterday. Yesterday was doom and gloom and everything was dropping. That's the market for you. Within one day, everything is flipped, right? Okay, so let's go to my demo on the MT4 and let's have a look at a few things. Now, we see a sharp drop in the Canadian JPY. These are one-day candles. So the Canadian JPY is pushed down for the last couple of weeks. What commodity is the Canadian dollar closely tied to? What commodity dropped in price that causes the Canadian to become weak? The number one GDP producer for Canada is oil, correct? Kevin, Natalie, Albert, and everybody. So oil's been dropping, and many times as oil goes, so goes the Canadian dollar. And why would I pair it against the Japanese yen? What happens with the yen when there's fear? When there's economic fear and oil prices are dropping, the yen tends to strengthen as a safe haven, right? Kevin, Lisa, and everybody. So if I expect the Canadian to weaken and the yen to strengthen, that's pairing a weak horse against a strong horse, and so boom, down went the Canadian. That was an easy trade over the past week. Okay, now look at the one-day candle support level. Okay, let's draw a line. Here's a bit of a support level in this area here. Okay, we see once it broke above this price line back in May, then it became support and bounced up. Support, bounced up. Support, bounced up. It tested it and right back up above that price level, got close, bounced up, and look where it is now, right near that price level. Okay, it could test it. It could drop a bit like it did here before bouncing up, right? If it's going to bounce up. With the positive sentiment today, what do you think might happen to oil? What do you think might happen to the strength of the Canadian dollar? And what do you think might happen to a safe haven like yen if there's positive sentiment, right? So the fundamentals tell us the yen might weaken today and the Canadian might strengthen. So maybe we trust the support level. Maybe we take a shot at this, right? So then we look at the technical analysis. Let's go off the 1 day candles and let's look a little closer. 4 hour. Look at that plunge, right? 1 hour. How about 15 minute? 5 minute? Looks like it's trying to form a little bit of a support level here. It hit, it bounced. It hit, it bounced. It hit, it's sitting there. Technically, this is not an uptrend yet. This is not an uptrend. So it might keep dropping because it's not showing an uptrend yet. This is a bit of technical analysis now. So how can we wait for an uptrend before we get in? Rather than buying now in a downtrend or a slowed downtrend, if it truly is going to become bullish and climb with today's positive sentiment, what kind of pending order could we put right above this resistance level? Here's resistance and drop, right? Resistance and drop. If we're right, and this is going to turn into an uptrend, we don't have to buy during the downtrend like it is now. We can wait for confirmation. What kind of pending order would buy only if it breaks above this high point? And you might say, why would you want to buy from a high point? Because we're waiting for an uptrend to start. I don't want to buy during a downtrend necessarily, even though it's better to buy from a low point than a higher point. What if you buy from the low point and it's a downtrend, it just keeps dropping, right? So if we think it'll go up significantly, we can wait until it breaks into an uptrend. A buy stop, correct. Finally, someone answered. Hussein and Blessing and everybody else. That's right. Buy stop. So if we're waiting for confirmation of an uptrend before we buy, then this might be a spot you're interested in. Put a buy stop. Because if the yen is going to weaken, and with those GDP numbers that could come out today, you could see the yen weaken so much, people run out of the safe haven, and the Canadian could strengthen with anticipation of, wow, big GDP numbers, oil price might go up. You could see this break this resistance and climb. And in the meantime, we let the downtrend go. Why buy on that downtrend? You can wait for confirmation of the breakthrough on the way up before you buy. Okay, so let's do that. Canadian JPY as an example. Okay, pending order. Remember in the web trader platform, how would I place this? I don't have to say buy stop and then put my price. In the AvaTrade Go mobile app and on our web trader, you would just put buy from. That's it. Buy when price hits. Remember? It's very simple. Here you have to know, okay, that's a buy stop if I'm buying from a higher price. Then you put the price. Okay? But it still works. MT5, MT4 and MT5 are fine. You just have to take that extra step and tell it what kind of pending order do you want. Then you put the price. The web trader and the AvaTrade Go just make it a little simple. So at price, what price might I want to buy from? So we're saying if it hits 78.15, then I'm buying. Okay? 78.15. Okay. And place. Okay, if it comes up, breaks this, and maybe I want to slide that up just a little bit more right there, maybe 1.6 there. If it hits this line up here, the pending order will buy. So I'm waiting for an uptrend, for a significant move up, then I want to buy, because then I say, confirmation of what we thought would happen today. An uptrend started, now I'm buying. Okay, so we wait up here. And where would my stop loss be? Technically speaking, if you're buying after it breaks through the resistance, it probably, if it's a true breakthrough, should not go back below that level. So where would we put our stop loss here? As a technical strategy, if you're buying after it breaks through a resistance level, which is what this strategy is doing, waiting for this little resistance level for the movement to break above it, then we buy. Your stop loss then would go where? Back below that level, right? 78.03. Ah, okay. 78.03, you're being patient, right? Not just below this resistance, but 78.03 would be below this one as well, giving yourself some wiggle room. Keep in mind, if let's say it breaks through, it triggers your buy, and then it just bounces down, then goes up further. If you have your stop loss too close, you get cut out, and then you miss the bigger movement, right? So I like that idea, Kevin, of the stop loss not just being back below this level once the buy is triggered, not just putting the stop loss here, but putting it also below that next price level down here. Then you can be more patient, right? So, but that's up to each individual trader, how much you want to risk. But in general, the rule is you put it back below that next price level or somewhere even further below it in this example. So my stop loss on this pending order, I might put down here below this breakthrough level and maybe below this little level right here as well. So maybe I'm saying 78.03 as suggested by Kevin. 78.03. Okay, shouldn't go down any lower than that if it's a true breakthrough with strong momentum up, right? So I'm only risking about 12 pips, right? My take profit, if this is a real move, my take profit could be up here at the next resistance level, which is this old support level here. Okay, so up around 78.46, let's say. 78.46. Okay, so look at my potential profit compared to my risk. I'm talking about 30 pips plus potential profit and only risking 12 pips. Okay, and it all makes sense technical analysis wise. Here's the next price level. This was resistance here and became support, and then became resistance again here. So if it does break through and trigger this trade, the next major price level is here. That's a 3-to-1 approximately potential profit to risk. All right. So this is very, very nice setup technically. Good question. Joss is asking, do I prefer to trade looking at the lower time frames rather than the bigger time frames? You notice I looked at both. I looked at the one-day candles. We were looking at one-day candles when we started. And we said, wow, this is near a major support level on the one-day candles. So we already said, technically speaking, with the large candles, that we're near a spot that maybe we expected to go up, right? Then we said the fundamental news might be on our side to go up as well. So then we zoom in, after looking at the bigger picture, we zoomed in onto the smaller candles, the smaller time periods, to find a more exact entry point, right? And so why are we waiting to get in? Because maybe we like the idea of waiting for an uptrend to start before buying, right? You see, this is still pushing down some. That support level on the one-day candles, remember, it's here where we drew the line, but it's got a little wiggle room. Look at this one shot down further before it went back up. So it might make sense to wait for the uptrend like we're doing, for it to break into an uptrend above this first resistance on the smaller candles before you buy. Okay? Lisa, the potential profit, we picked a level where if you go up, you see it used to be an important price level. Okay? This was a support level here. You see it hit and held. And then once it went below that price level, you see as it went up, it became resistance. It hit and dropped. Okay, so if it gets upward momentum, maybe you decide to take profit here. This would be the first little resistance level. You see here it hit and dropped. And over here, that was a support level. Support, support, support. So let's say maybe you do a strategy where as it's going up, if this triggers today, which I think it likely could trigger, if this buy stop triggers, maybe you do a partial close at the first resistance level, let part of the trade keep running, and close the rest of it at the next resistance level. Okay? So I might program my take profit at 78.46. But as this runs up, I could open the trade. And you might say, well, how do you do a partial close? Let's pretend the trade is open now. Okay, let's say this is the trade and let's say it's in profit and it got up to this price level. And we say, okay, I want to close half of it now. Okay, fine. Let me go. I'll go modify. I'll change it from modify to market execution. And you see now I right-clicked over the open trade. I changed it to market execution. And now you see I have the ability to close that order number. And it tells me I'm closing the whole thing. Well, if I want to close only part of it, I change the volume 0.02. Okay, now you see here it says I'm closing only 0.02. If I want to close 0.03, there, I changed that. Now it says I'm closing 0.03. So then I close it and it left the rest open. Now instead of 0.05 being open, I have 0.02. Very simple. Okay, so you can take profit at different levels on the way up as you reach different resistance levels. But likely if it breaks this resistance level here, then there must have been good news to get that momentum going. Okay. All right, great. So what about oil? Let's look at oil, since we expect maybe oil could bounce now, right? Maybe oil bounces today. Let's look. Look at that. It also is forming a double bottom on the 5-minute candles. It hit, went up. It's getting down and trying to bounce again. If we look at 1-day candles, look at the support level just down here. Okay. There's a support level. It hit and up. It hit and back up. It's testing that support level. Now I see a zone here. Here's the next level down right there. Okay, you see there's a support level here, but then if it breaks this, there's another support level right here where you see these ones hit and went up, hit and went up, and that was a resistance level here. Resistance down, resistance down. Once it broke above, that became support and up, and then a higher support level formed here. Okay, so if I'm buying on oil, I'm willing to be patient then that it could push down to the next support level, which is this one here. My potential profit, if I'm buying, I could say this resistance level is where I would take profit. So even if my stop loss is below 1, 2 support levels, I put my stop loss here, I'm risking about 1/3 of my potential profit up to the first resistance level here. You see? So technically speaking, this is a nice setup to buy from. Why? Because there's 2 support levels to back you up. And fundamentally speaking, there's positive momentum maybe coming today with those GDP numbers out of the US. You could be wrong, right? That's why you put a stop loss, right? There's no guarantee. But technically speaking, this looks like a nice setup. So if I'm going to buy, as an example, on oil, you know, you take a trade size that makes sense. Maybe you have a larger balance and you say, I'm going to do 1 full lot. That's 1,000 barrels. Okay, if I'm going to do 1 full lot, okay, I can make 1,000 for every $1 this goes up. Okay, so risking 1,000. Where's my stop loss? Here, below this level. So 30, let's say 33.9 would get me below that second support level. 33.9. This is more of a longer term move. I'm only looking at 1-day candles right now. I'm looking at larger movement, as opposed to the last one we placed our trade based off of not just 1 day, but 5-minute candles. Now I'm looking at take profit all the way up here, about 41.3 or so is just before the next resistance level, maybe 41.25. Okay, so if I buy now on this, there we are. Okay, so now I'm in on a move on oil. Potential profit about 3 times what my risk is, and I've got this support level and the next support level in my favor. Maybe I slide my stop loss a little bit further below that support level. Okay, so it truly has to break the second support before I give up. And my potential profit still is much larger than what I'm risking, almost 3 times the potential profit. And now I can just be patient and watch the GDP numbers later today and hope, if good numbers come through, boy, oil could go flying back up, right? And if bad numbers come, I have limited risk. Okay? Yeah, why would USD JPY be on an uptrend? Because the yen might weaken with the positive sentiment, USD could strengthen with good GDP numbers, right? So that's another one you could look at. Just like Canadian JPY might have reasons to go up, USD JPY, same thing. Very good point, Daniel. What about gold? Gold is very interesting because it pulled down quite a bit, but we are in a global pandemic still, so maybe it's an opportunity to get in on gold. Okay, let's look at gold. Look how much gold came down. Look at this downtrend, right? Downtrend here, right? And then the question is, will this keep dropping? Will it go up? Let's zoom in then. 4-hour candles. I see a bit of a support level here. Okay, right about where the price of gold is now. It's testing a support level. Okay. Wow, what a drop. And if this goes flying back up, look at the potential to climb before it gets to these resistance levels up here around 1910 or so. So we're talking $25, $35 per ounce rise before it gets to this resistance level up here. Many times, a good rule of thumb, the quicker something drops, the more likely it is to maybe bounce back the opposite direction, right? Look how rapidly gold dropped here. So the potential for a strong rebound is there. Look at this rapid drop in the past, and look how quickly this came back up, right? Rapid drop here, and look how quickly it went back up. Okay, so another rapid drop. It's still downtrending, right? Gold is still downtrending. So just like the Canadian JPY, maybe you wait for an uptrend before you get in on a buy on gold, right? If we look at 1-hour candles, we could say, okay, if gold breaks above 1883, resistance down, resistance down. If gold hits 1886, let's say, then that's a strong uptrend. Then maybe it rises to the next major resistance level up here, 1911. Okay, so if it hits 18, let's say 85, if gold hits 1885, and I program a buy stop, 1885, and I put my stop loss just back below at 1880. So limited risk, 1880, right? And my take profit at 1909. Look at this setup. You're waiting for an uptrend to break the resistance level before you get in. Maybe I slide that up just a little bit more. Okay, it has to break above these high points to get in. Your stop loss back down below that. And the potential profit to this resistance level up here, about 4 times what you're risking, right? So that's the power of pending orders, waiting for what you expect. And the ironic thing here is with gold since the pandemic, if the GDP numbers come in good today out of the US, with good economic data, what we've seen with gold lately is it goes up, not down during this pandemic. That's the pattern we've seen over the past months because people are flooding out of the USD as a safe haven and buying into gold as good economic data comes in, thinking that there's got to be a bubble that bursts, and gold investors, as the markets are rising, are actually buying back into gold. If you look at the charts over the past months, gold was hitting all-time highs at the same time the NASDAQ was, moving in the same direction. So we see the markets crashed the last couple days, right? Well, what happened with gold? It also crashed. So if we're expecting with good GDP numbers maybe today that the indices might fly back up, you might see gold follow them up. As crazy as that sounds, a safe haven like gold following the markets up. That's what's been happening. So I don't have to figure out necessarily why that's been happening. We just know that that's been the pattern, right? And so pending order up here, stop loss here, take profit up here. Boy, those could pay well with limited risk, right? With limited risk. Jazz, good question. What triggers a drop in gold? During the pandemic, it's been higher fear. The volatility index that we looked at earlier, the fear index, was at like 20% up yesterday. The volatility index, the fear index, was through the roof. Why do people sell gold when volatility is so high? Because the fear got so high, they wanted cash in hand. They wanted cash in hand. So gold investors are afraid sometimes that if the markets are crashing too much, they want to get cash in hand, and they actually liquidate the gold, and gold drops with it. Okay. Many times, Cyrus, you see that. You see gold and oil go in opposite directions, because if the economy's bad, which pulls oil down, the safe haven gold tends to go up. But during this pandemic, I would say no, that hasn't been the case. Gold has actually been following the markets up rather than going against them. Okay. And so, listen, you don't have to guess. You could put a pending order just like I did. And if it breaks this resistance level, you likely could see a climb up to the next one. Okay. So markets crashed, gold crashed, right? Markets crashed, gold crashed. That's what we saw the last couple of days. So if markets go up today, you very well could see gold go up with the markets and with oil, rather than the opposite of oil. All right. So during a situation like a global pandemic, you don't always have the same relationships between assets as you do during normal market conditions. And as we've seen through the pandemic, markets in the recovery from the pandemic, as they went up, so did gold. Okay. And so did oil. Kind of crazy that they all were moving up together, but that's what we've seen. And we see confirmation of that yesterday and the day before. Look, gold crashed, so did the markets, right? Yeah, Cyrus, we can talk offline later, since I think you're in my portfolio of clients. Okay, so great. And we see crude oil trying to push up for us here in the short term. So already showing some momentum for us on that. And look, the Canadian JPY, our buy stop, actually there was a market Canadian JPY that's open. Our buy stop might kick in as well on the Canadian JPY. This was the sample one I opened. I forgot about that when I was showing you how to do a partial close. That's why we have a Canadian JPY open on the market. Our Canadian JPY buy stop, I think it'll probably open soon. It'll probably kick in. So we've been going about 50 minutes here. I just want to quickly show you the opportunities maybe with the major indices, and then we'll call it quits today. Look at the S&P 500. Look at the support level that is formed here, S&P 500. Okay, what do you think will happen if I can get my support? There we go. What do you think will happen with this movement? Will it bounce off of here if we have good GDP numbers today? If good GDP numbers come in, what do you think this support level will do? Hold or break? Yeah, Cyrus, we've got a Canadian JPY buy prepared as a buy stop pending order in case the uptrend hits. Keaton, I think the support level, if good GDP numbers come in today, will hold, and you'll see a big bounce off this support. Okay, that's if good GDP numbers come in. Remember, the expectation today on the GDP numbers out of the US, which is in 39 minutes, the announcement's coming. 31% expected GDP growth. We've never heard of numbers like that ever. If that comes in at that level or higher, you could see the stock market go racing up like you've never seen. Okay, especially after selling off the last couple of days. All right, no guarantee, but the potential is there. with this announcement in just 39 minutes. So what can you do to prepare for that? Well, I can go to S&P 500 or NASDAQ or Dow Jones. They're all sitting at a spot above a support level. Look at the support level that formed, right? So it might break it because the announcement's not for a while, right? But I still could say, you know what? I'm going to buy on this, okay? Maybe I'm going to take a significant trade on this. Instead of doing a pending order, maybe this one I'll just do a market move. You could do the pending order strategy as well, though. Okay, let's say I'm buying on this based on expectation of potential positive movement today. But I'm going to limit my risk because I could be wrong. I could be wrong. So if it breaks the support and goes below this one, okay, 32.11, you see this support level down here? Right here. There's a secondary support. It can break the first support and test the second. If it breaks the second one, I'm out because then the GDP numbers must have been bad, right? If that happens. So I'm going to say if it hits below 3,200, let's say 31.95. Let me modify, put my stop loss. 31.95 is my stop loss. Okay. Why did I put my stop loss there? Because if it breaks the two support levels, then boy, it must have been really bad news today. Then I'm out, right? Where would I take profit if it does start going into profit? I like this little support level and resistance level in this area here. Okay, this was resistance, and then went above, and then became a support area here, and then broke below it. So my potential profit would be about double what I'm risking to this price level here, this little resistance area here. So maybe 33.85. 33.85. And you guys see this is more of an art than a science, right? There aren't exact things in trading necessarily, exact agreement of exactly where the resistance level is or the support level. But you can see in general some resistance here, some support in this area from the old price movements, and then a plunge when it got past this price level. Look at the plunge. Okay, so it took momentum to break this price level because look what happened after it broke. So if it's going back up, that could be a spot where you might take profit because it might take extra momentum to get past that point. It took a lot of momentum to break it. It might take a lot of momentum to break past it, and you might see a pullback at that price. So that's a spot where maybe you take profit. Okay, now we see S&P 500 surging up in profit, right? Doesn't mean it won't push down further first, but it's trying to bounce off that first support level. If it breaks the first support level, we've got a backup second support level. And you know what? The GDP numbers should come before that happens, right? And if those numbers are anywhere near 30% growth, you might see the markets move like you've never seen before, right? So that's trading. It's not a guarantee, but it's about potential. And you could do that on the S&P 500. You could do that on the NASDAQ. Look at the support level. It's the same thing. You could do that on the Dow Jones. Also at a low point that it could come flying up from. Look at the CAC. Same thing. The DAX. Same thing. Okay? I'm leaning on the US indices because it's the US GDP that's coming out. Okay? But it's a global marketplace. You could be looking at any of these. Look at the Nikkei. Also starting to bounce after dropping. Okay? All right, everybody. I think this is a good place to stop. Any questions before we end things? All right. Thank you, everybody, for joining. We had a really nice crowd, some nice questions, some nice input that's very helpful. I really think you all should be trading today. If you don't have a live account, get one. Look at some of these assets, make some moves because there's huge potential today and you can manage your risk in a way that makes sense, okay? Thank you, Marius. I appreciate it. All right, bye for now, everybody. You can attend as many sessions as you'd like, Cyrus, okay? Talk to support or me, since I'm your account manager, I think, and we'll make sure you have the links for registering ongoing, okay?